Welcome back. This is Jacob Milliken, owner of 9M Investments, and today I'm going to jump into August private performance. These are the funds that we use for our clients, and this is the performance they had for the month of August. So jumping right into it, starting with the private real estate that we own for our clients, Blackstone REIT being one of the larger uh, REITs out there, over $50 billion in assets, so a very, very large REIT. Very, very diversified as well. Over 4,000 properties within that REIT. Rental housing, logistics, data centers being some of the main drivers there. Data centers also obviously being a newer addition and a big driver of some of this per return. For the month, it was up almost 0.5%, over 4% on the year. So very good return so far this year. Again, key diversifier when we're building portfolios. When you look at equities and bonds and other things, this real estate is really moves in its own pace. The next one there being Moving Global Cities REIT, up 4.6% on the month, up over 2.68 year to date. Very nice distribution, 5.5% there. A little bit smaller REIT, about $3 billion. Again, still very large. Over 100 properties. Also has some global exposure. So again, diversity being a key part of this. Looking down into the private credit space that we own for our clients, these are really built for income. And this is where we can get yield, but not only yield, because you can find yield other places, but this is the steady NAV, which means the price movement on a month-to-month basis. You're not going to get these wild swings. And really, when we talk about the price movement, it's going to be lower than treasuries when it comes to that. So very, very stable. And then if we're using that yield for income or using that yield to reinvest, really kind of depends from client to client. But again, Blackstone private credit up over 0.6% in August, now right below 5% or 6% for the year, a 10.5% yield. Blue Owl up almost 5.5% on year to date, a 10.26% yield. And then Carlisle right at 4.5%, right over 5.5%, and a little lower yield, 9.63. Again, very, very strong. What these are, most of these three groups are all floating rate. So as interest rates move up and down, these yields will move up and down with those. Senior secured, so it means the loans that are inside of this and these funds, if something were to go wrong, what is the downside? Well, they can step in and take over these companies. So very different from your typical debt where you're lowered in the stack. So very important piece of why these make sense for clients. And again, that steadiness and that strong yield, big portion of why we have private credit in the portfolios. And then lastly, looking at the private equity, the two funds that I own, again, for our clients are BlackRock Private Investment Fund and iDirect Private Markets Fund. When you start talking about private equity, why would you want to own it at all? Well, within the public universe, there's about 4,700 companies that are public today. That's down quite a bit versus, going back 10 years, 15 years, 20 years, down about 3,000 companies that are public. The vast majority of public or companies in the US are actually private. And so the ability to have that diversification, actually have client or companies that you otherwise couldn't get access to, is a big part of why we want to have these types of investments. Looking at what happened in August, BlackRock fund was up 3.27%. Very, actually, one of its largest returns since this fund came online. Year-to-date performance at 9.87%. And then iDirect Private Markets Fund up 1.37%, and year-to-date up 8.2%. So again, the big reason why we want to have these is having access to those companies that aren't publicly available. And these are very strong investment managers. BlackRock obviously has been around for a very long time. iDirect Private Markets Fund is a mix between KKR, Warburg Pincus, and Vista Equity. So three major players within the private equity world. Again, give you that diversification within that one fund, but also, again, giving you access to companies that you otherwise wouldn't be able to invest in, and hopefully get some of that value before they go public. So this was today's update. I hope you enjoyed it. If you have any questions, please reach out.